your tax return, you can take one personal exemption for yourself and one for your spouse if you're married. You can also take one exemption for each of your dependents. What is an exemption exactly? Well, it's a dollar amount that taxpayers can claim for themselves, their spouses, and their eligible dependents. Exemptions are listed on line 6D on the 1040. And this dollar amount can be deducted from a taxpayer's total income, thereby reducing the taxable income, which is the name of the game. Can anyone claim you or your spouse as a dependent on their tax return? The answer has to be no in order to claim your own personal exemption. A spouse may be claimed as a personal exemption if married as of December 31st of the tax year, and the spouse cannot be claimed as a dependent on another person's tax return, and the taxpayer files a joint return or files a separate return and the spouse had no income and is not filing. Can a spouse be claimed on a taxpayer's return as a dependent? Well, according to the IRS, no, never. However, a spouse's personal exemption may be claimed by the taxpayer under the conditions that we just previously talked about. Can a deceased spouse be claimed on a taxpayer's return as a personal exemption? Yes, if the taxpayer did not remarry by December 31st of the tax year and was not divorced or legally separated from the spouse on the date of death, and would have been able to claim the exemption under the rules for a joint or separate return. What about common law marriages? Well, the rules for common law marriages vary by state. A common law marriage is recognized for federal tax purposes if it is recognized by the state where the taxpayers currently live or in the state where the common law marriage began, and the marriage has not been legally dissolved, such as by death or divorce. Now let's talk about dependents for a moment. Despite attempts by the IRS to clarify whether or not someone qualifies as a dependent, today's complex living arrangements often raise questions as to just whom can be claimed on your tax return. There are now two classes of people who can qualify as dependents: qualifying children and qualifying relatives. Now let's look at the distinctions between the two. A dependent is your qualifying child or qualifying relative if you claim an exemption for a dependent. That dependent cannot claim his or her own personal exemption. Makes sense? Now there's 4 tests to be a qualifying child. You know how the IRS loves their tests. First, the relationship test. Second, the age test, the residency test, and the support test. Again, these are the 4 tests to be a qualifying child. First, the relationship test. The child must be your son, daughter, stepchild, eligible foster child, adopted child, or a descendant of any of them. In other words, a grandchild. Or your brother, sister, half-brother, half-sister, stepbrother, stepsister, or a descendant. For example, niece or nephew. The age test. The child, again, we're talking about the qualifying child test now. The child must be under age 19 at the end of the year and younger than you, or a full-time student under age 24 at the end of the year, or permanently and totally disabled at any time during the year, regardless of age. The residency test. The child must have lived with you for more than half of the year, with exceptions for temporary absences. If a child would be a qualifying child, except for not meeting the residency test, the child may be your qualifying relative. If the child doesn't live with you but lives in Canada or Mexico and meets the gross income test and the support test, the child could be your qualifying relative. Finally, the support test. The child cannot have provided more than half of his or her own support for the year. Support expenses can include food, lodging, clothing, education, medical and dental care, recreation, transportation, and ordinary and necessary expenses to live. Support expenses that are excluded: scholarships received by a dependent, taxes, life insurance premiums. Now, there is a special test for a qualifying child of more than one person. Sometimes a child meets the relationship, residency, and support tests to be a qualifying child of more than one person. However, only one person can actually claim the child as a qualifying child and take all of the tax benefits. Now let's look at a qualifying relative. Again, there are tests to be a qualifying relative. Number 1, not a qualifying child. Makes sense, right? Number 2, relationship or member of household test, the gross income test, and the support test. A child obviously is not your qualifying relative if the child is your qualifying child or the qualifying child of another. The relationship or member of household test. To meet this test, a person must either live with you all year or be related to you. For example, child, grandchild, brother, sister, father, mother, grandparent, niece, nephew, uncle, aunt. And take note, a cousin can only be claimed as a dependent if he or she lived with the taxpayer all year. Next, the gross income test. To meet this test, a person's gross income must be less than the amount of the dependency exemption, $4,050 for tax year 2016. Gross income, or the definition of gross income for the gross income dependency test, is all income that's received but not necessarily exempt from tax. This includes all unemployment compensation, and Social Security is generally excluded from gross income unless additional income is received. And finally, the support test. You must provide more than half of the person's total support for the calendar year to satisfy this test. You can figure this by comparing the amount that you contributed for that person's support to the entire amount of support that person received from all sources, including the support the person provided from his or her own funds. So what are the basic differences between a qualifying child and a qualifying relative? Well, let's take a look. Qualifying child, the filing status can be head of household for the taxpayer. Same for the qualifying relative. In the qualifying child column, taxpayer receives an exemption. Same for the qualifying relative. The qualifying child can qualify for the education credit. Same for the qualifying relative. Child care credit. The qualifying child is eligible for this. Same for the qualifying relative. However, only the qualifying child is eligible for the earned income credit. We'll talk about this credit in a later module. And only the qualifying child is eligible for the child tax credit. And again, we'll talk about this credit later on. So let's take a look at an example. Jenny married Rick in April of the tax year. Neither can be claimed as a dependent on another's tax return. Both worked and earned gross income for the tax year. Can they claim both of their personal exemptions on their joint tax return? Well, the answer is yes. Married taxpayers filing a joint return can claim 2 personal exemptions, one for each spouse. A taxpayer's girlfriend and her 2-year-old son live with the taxpayer, who basically pays all the living expenses. Can the taxpayer claim both of them as dependents? Well, the answer is yes, if they meet all the IRS requirements for dependents. Did they live with the taxpayer all year long? Did the taxpayer provide more than half of their support? Did either of them have gross income of less than $4,050? If the taxpayer answers yes to all 3 questions, then he can claim both his girlfriend and her son as dependents. The rules say a qualifying child must live with you for more than half the year. My daughter was born in October. Does that mean I have to wait until next year to claim her? Well, the answer is no. Even a child born on December 31st qualifies as a dependent and earns the full $4,050 exemption. The same rule applies if a child dies during the year. A child who is born or dies during the year is treated as having lived with the taxpayer all year long. So what's the dollar value? How much are personal exemptions and dependents worth to me on my tax return? Well, let's take a look at this little example. Roger Wilco and his wife Rhonda, they've got 2 children, Jeremy and Whitney. And if we were to fill out their 1040, Roger and Rhonda, Jeremy and Whitney, the total number of exemptions down on line 6D is 4. And if we were to flip the 1040 over and look on line 42, we multiply $4,050 by the number on 6D, which totals $16,200. So that's the dollar value of the husband, the wife, and the 2 children as far as exemptions are concerned. Now, there is a phase out of personal exemptions. The amount of each exemption that an individual can claim begins to phase out if the individual's adjusted gross income, and again, we'll talk about adjusted gross income in a later module, if the adjusted gross income exceeds a threshold amount, which was $311,300 for 2016. The deduction for personal exemptions is completely phased out when the individual's adjusted gross income exceeds a specified cap amount, which in 2016 was $433,800. So, in summary, there are 2 types of exemptions on the tax return: personal and dependency exemptions. Exemptions go to reduce taxable income. Taxpayers can claim a personal exemption for themselves if they're not another taxpayer's dependent, for a spouse if filing jointly and the spouse is not another taxpayer's dependent, and for a spouse if filing separately and the spouse had no income, is not filing, and is not another taxpayer's dependent. You cannot claim any dependents if you or your spouse, if filing jointly, could be claimed as a dependent by another taxpayer. You cannot claim a married person who files a joint return as a dependent unless that joint return is filed only to claim a refund. You cannot claim a person as a dependent unless that person is a U.S. citizen, a U.S. resident alien, U.S. national, or a resident of Canada or Mexico. And you cannot claim a person as a dependent unless that person is your qualifying child or your qualifying relative. Now remember the tests. To be a qualifying child, the child must be your son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, stepbrother, stepsister, or a descendant of any of those. The child must be under age 19 at the end of the year and younger than you or your spouse if filing jointly, or under age 24 at the end of the year a student and younger than you or your spouse if filing jointly, or any age if permanently and totally disabled. The child must have lived with you for more than half the year, and the child must not have provided more than half of his or her own support for the year. Finally, the child must not be filing a joint return for the year unless that tax return is filed only to claim a refund of income tax withheld or estimated tax paid. And the test to be a qualifying relative: the person cannot be your qualifying child or the qualifying child of any other taxpayer. The person either A, must be related to you, or B, must live with you all year as a member of your household, and your relationship must not violate local law. Third, the person's gross income for the year must be less than $4,050 for 2016, and you must provide more than half of the person's total support for the year. Next, let's take a look at some review questions.